In this podcast episode, Zitron, a seasoned tech industry professional and critic, presents a contrarian and deeply skeptical perspective on the current state and future of generative AI. He challenges widely held beliefs around AI's economic impact, technological capabilities, and the hype surrounding its rapid adoption, while raising concerns about the unsustainable spending, exaggerated promises, and environmental consequences of large AI projects. Ed also explores key industry dynamics, the fragility of major AI players, and implications for the economy and everyday users. Ed Zitron begins by asserting that generative AI is essentially a con, overwhelmingly oversold by the companies behind it. He argues that from the outset, the technology has been marketed with magic-like promises, that it will replace all jobs, cure diseases like cancer, and revolutionize everything. Yet the reality is a boring, expensive, unprofitable, and unreliable cloud software product. According to Ed, this ongoing misrepresentation exploits weaknesses in journalism, investor analysis, government oversight, and public understanding, misleading everyone about AI's true capabilities and economic viability. Challenging the narrative that AI is generating massive economic growth, Ed explains that none of the leading AI companies, OpenAI, Anthropic, Google, Microsoft, Amazon, are currently profitable from AI efforts alone. OpenAI reportedly lost $20.9 billion last year, despite billions of dollars in capital expenditures and investments from tech giants. Ed highlights that most revenues linked to AI are actually subsidies circulating between a handful of interconnected companies rather than organic consumer-driven demand. These companies also obscure true AI revenue figures, often reporting annualized run rates without clear definitions to create the illusion of growth. The capital spending on building massive GPU-centric data centers and infrastructure far exceeds any measurable returns so far. Ed disputes the sweeping claim that AI will replace all human jobs, emphasizing that there is no strong economic data supporting widespread displacement. While some routine contract and lower skill positions, like art directors, transcribers, and translators, might see automation, the majority of jobs remain intact. He separates generative AI from robotics and agentic AI, noting that much of the discourse conflates fundamentally different technologies. Robotics, while promising, remains a distant prospect and is constrained by hardware and intelligence challenges. Even in fields where AI has been deployed, such as coding or administrative functions, Ed sees limited evidence of transformative productivity gains. Contrary to claims of spontaneous and enthusiastic adoption, Ed characterizes AI integration into tools like Google Search, Microsoft Word's Copilot, and Amazon's recommendation systems as largely coercive and heavily subsidized. Users feel pressured to adopt AI functionalities due to workplace mandates or media-induced fear of falling behind. The costs of running these AI models are hidden by subscription pricing and token systems that mask actual expenditures, causing enterprises to balk when confronted with the real expenses of large-scale usage. The adoption is therefore not a clear sign of value, but a product of artificial demand stimulation. A key point Ed elaborates on is the opaque and expensive token-based economic model underlying AI services. Users pay per token, approximately 3/4 of a word, but unlimited usage is often subsidized. For example, on a $200 a month subscription, token usage could equate to thousands of dollars of back-end compute cost. This pricing disconnect means that companies are heavily subsidizing usage, creating an unsustainable economic model where substantial losses persist. Attempts to charge true costs to enterprises have caused shock and pushback, demonstrating that current AI usage is economically fragile. Ed critiques the fundamental performance of current large language models, LLMs, especially their tendency to hallucinate, generate plausible-sounding but false information. He contrasts this with human editors, like his own editor Matt Hughes, emphasizing the importance of trust, context, and iterative understanding that AI lacks. Despite improvements reflected in certain benchmarks, hallucinations remain problematic in real-world applications, including code generation that can introduce bugs or security issues. The costs of these errors, compounded by human over-reliance on AI tools, create a precarious environment for businesses and users. The conversation reveals a troubling trend of worsening software quality in major tech platforms, which Ed partly attributes to the proliferation of AI-assisted coding. Increasingly buggy products, downtime incidents, such as multiple Amazon Web Services outages and degraded user experience in services like Google Search and Docs, highlight the unintended consequences of AI integration. This decline strains trust and productivity while illustrating that AI is far from the seamless productivity booster its boosters claim. Ed draws historical parallels to earlier technological transitions, such as the dot-com bubble and the introduction of cars. While acknowledging that disruptive innovations often start imperfect and benefit from hardware improvements over time, he notes that the scale of investment and loss in AI dwarfs previous tech transitions. Unlike the internet's gradual, organic adoption, generative AI is experiencing an engineered speculative bubble driven by hype and market pressures rather than clear consumer demand. Beyond financial and technical critiques, Ed raises environmental and social concerns about AI infrastructure. Massive GPU data centers consume enormous quantities of energy, sometimes supplied by polluting gas turbines, affecting surrounding communities and contributing to inflation in consumer electronics. These developments highlight the disparity between the promises of AI's societal benefits and the tangible costs borne by ordinary people unable to access similar funding or capital. Ed dismisses the idea of a meaningful AI race between the United States and China as largely political theater. He points out that China has had access to critical GPUs for years and already possesses large language models. The competitive narrative serves to justify trillions in governmental spending and frantic market moves rather than reflecting a genuine technological arms race with clear winners in sight. This race narrative feeds into AI hype without substantiating demand or technological breakthroughs. Ed presents AI as the centerpiece of an ongoing rock-com bubble, a bubble of misplaced capital inflows into big tech's latest shiny object amid dwindling alternative growth avenues. He warns that leading AI ventures, especially OpenAI and Anthropic, are unsustainable entities propped up by continuous injections of funds from tech titans and venture capital. These companies' failure to go public as planned, extended delays, and enormous capital expenditure commitments signal potential collapse. A failure of these players could trigger widespread market and economic repercussions, given the dependence of tech valuations on AI promises. Ed foresees significant downstream effects if the AI bubble bursts around 2027. A sharp contraction could depress major tech stocks, drag down venture capital investments, and lead to widespread job cuts in the technology sector. Retail investors with exposure to the so-called Magnificent Seven tech stocks risk losses, potentially shrinking retirement portfolios by 20 to 40%. The implications extend beyond tech into broader economic volatility, and Ed advises conservatism for everyday investors amid this uncertainty. The podcast delves into how CEOs and AI industry leaders craft narratives of inevitable, transformative AI breakthroughs to maintain investor confidence and justify massive spending on infrastructure. Quotes from Sundar Pichai, Andy Jassy, and Mark Zuckerberg illustrate aggressive capacity-building strategies, often contradicted by the lack of transparent revenue reporting or proof of profitability. Ed points out how companies use ambiguous metrics like annualized run rates to inflate perceptions of AI success and keep speculation alive. Ed argues that the current trajectory of large language models is hitting diminishing returns. Without a major hardware or algorithmic breakthrough significantly cutting costs, further gains in AI capability and usability are unlikely to justify the enormous capital outlays. He contrasts this with other innovations where improvements followed exponential curves driven by hardware advances. Moore's Law, something he contends GPUs and AI training cannot sustain at scale. He doubts the arrival of truly autonomous or magic AI products and states that much of what is promised remains speculative or fundamentally unattainable. A nuanced discussion emerges comparing AI-generated outputs with human creativity, judgment, and relationship building. Ed emphasizes that AI currently produces median or generic content and lacks the capacity for genuine learning, emotional context, and nuanced understanding. Through examples such as editing, creative collaboration, and complex problem-solving, the human contribution is shown to remain irreplaceable. Value arises not just from output, but from human connection, critical thinking, and trustworthiness. The conversation touches on dangers posed by AI models having autonomous internet access or being weaponized for malicious purposes like automated hacking. Ed highlights real incidents partly attributable to misconfiguration or overambitious AI deployments, but asserts that the bigger problem is that these powerful systems are already in the hands of unaccountable tech executives rather than malicious external actors. He advocates for regulating compute resources to mitigate these risks rather than relying on self-regulation from industry players. Throughout, Ed underlines the intense information war surrounding AI. Competing narratives from boosters, skeptics, investors, engineers, journalists, and regulators. Bold claims about AI's future are often made to secure funding or market share rather than reflect current realities. Skeptics like Ed face pushback, and both hype and fear-based messaging muddy public understanding. He stresses the importance of focusing on present-day facts and transparency over speculative, futuristic claims. In closing, Ed reflects on the emotional and human toll intertwined with technological change. He highlights the role of high-quality human relationships, social connection, and mutual support as vital for navigating uncertain times full of hype, disillusionment, and economic turbulence. Rather than placing absolute faith in AI or tech narratives, strengthening community and celebrating shared human experiences are key to resilience and well-being.